So I want to start off with a very simple method, and I recently shared and pinned this setup in chat where I showed this nice colorblind setup, and I thought I'd start here with a video. So we're going to start off very quickly by saying that this is primarily something that I'm using on the 1 hour and 4 hour chart. However, there are times where you can go down onto lower period charts, and I will show a few of those later in the video. The first thing I will do is I'll run through the indicators and the setup and what I'm looking for. So if we work from top to bottom of our screen, we've started off with pip hunter SS. Everything is turned on except for this one plot, and all of the settings should be completely standard. Next we have baseline overlay. I have set these first two to 250. And then right down near the bottom, I've set the alligator ribbon to the chart setting. And then when it comes to the style tab, I simply set my colors up. These are just blue and orange because they're colorblind friendly. I have set the take profit flags. I've actually turned them on and I made them bright pink. It doesn't matter if you're not seeing the difference between a long position or a short position's take profit flag, because you're only ever going to get one displaying, and I'll explain what I mean by that in a moment. And then I have these three plots here, which are for my alligator ribbon, and that is all of the plots I have on for baseline, and you can see that it looks like this. And then I have my pip hunter back D, which again I have set to area, and I've given it some colorblind friendly settings. The yellow you don't have to worry so much about. That's just for when you're looking back so far in time that there's not enough data. And then when it comes to the settings, I've used 31, 3 and 28. I think the standard settings from memory are 15, 2 and 28, so you may need to change those. Now the question is, what am I actually looking for with this setup? And I will start off by showing it on the 1 hour on AutoCAD, because that's what I have open. Now what I'm really looking for is when I am getting, first of all, my nice little close ribbon all needs to be in the same direction and fanned out nicely. So what I mean by that, if I just come to here for instance, from sort of here, you can see that it's all going in the same direction where they've all gone orange. And we're looking for when they start behaving nicely. So they're all now fanned out in orange. Ideal is if you're also with your major long-term moving average, when you're also the correct side of that is being highly important. Whether it's the right color or not doesn't matter so much, providing you're the right side of it. So in this case, as we start breaking below this line just here, we know that we're looking for those self signals, and we then are just adding confluences together, which includes the little cell icons and back D. Now, how are we looking at taking our trade? We will look at entering, when you've had your sell signal, look at the last few candles and look to see if there was some kind of support or resistance that it's formed, even if it's just a very small one. If there was some sort of consolidation over the previous candles, then that would be how you're going to set your stop loss and take profit. So by this, I'm going to put it at the first one where they went orange, which we'll just go with this candle. And the previous support and resistance it's come from is just here, so we would just set our stop loss just above those, and then we can leave it running. I will show you how you take profits, and I'm just marking it straight up to go to the next line. Now, the way we really want to be taking profits is we look for these pinky purple flags, and the pink purple flags are usually a good sign to be getting out, and then there are other options for escape. The other options for escape include a scalping take profit. So what that would look like would be if you're looking for a 1 to 2, which would be reasonable, or if you're just looking for 1 to 1, if you're being quite aggressive with your goals, 1 to 1.5 would be better than 1 to 1, obviously, because it's better risk reward, and that should really be the sort of minimum you're aiming for. but I would always favour on the idea of 1 to 2, especially when you're scalping like this, because your stop loss can be very, very tight. And if I show you another example where what I mean by how tight you can really be playing is that you can look so that your stop loss is here, and you would still end up triggering on this wick just here. And that would be 1 to 2, nice and aggressively for a small trade. That you will have times where this trade, for instance, will hit stop loss, but then you'll also have times where you'll be able to get nice, clean movements. Here's some other examples. And feel free to, if you want to secure 50% at 1 to 1 and trail stop it, that would also be perfectly fine. But your overall aim is that you're trading using the moving averages as a guide to trade on trend with your sell signals and back D as extra confirmation. And then for your exits, you have multiple possible exits. You can either use the lack of you can use the flags popping up, you can use counter of back D. So if back D had gone to the opposite colour before you've got a flag printed, which is incredibly unlikely, but it can happen, then that could also be valid. And then you're also not going to be interested in taking signal in, like, this is never going to have any form of buy. Even if there was a buying signal show up here, you still wouldn't take it because this is still orange and it's all not nicely fanned out. Also, you're under the major EMA. However, these signals on the other side, again, you're more than welcome to take all of these signals down. You will, again, this one and this one, you might find a small loss depending on how tight your take profit and stop loss is. Also, I wouldn't recommend taking the multiple when they're next to each other. So for instance, if you're still, say if you've taken a trade here, if this signal has popped up, you're still in this one, don't take two signals, just let the original one play out. And then as a general good practice, I would say that when you're finding consolidation around one of the major lines that's being printed, maybe reconsider taking the trade. You'll note that sometimes price action just gets a bit choppy when you're in and around the major lines. If you're finding it's one of those times where you are just consolidating, then maybe just leave it for a day. Try and catch it during the start of a session, be it London, New York, or Tokyo session. Now, I should probably cover the times where you're good to drop down timeframes. Now, I'm on OrdCAD currently, so if I drop down timeframes, the moves will start getting incredibly small at times, where you'll get lots of consolidation. However, you will get good moves going in through your Tokyo session where this move would have occurred. And then, again, sometimes you'll get a move into New York, but depending on the strength of CAD that day. However, with forex pairs like this, it's generally not going to be strong enough to give you a good move during the day during the 15-minute chart. GBP ORD can have some volatility, so this might be an exception to you, but most pairs are not going to have that volatility. However, if I go to BTC, for instance, you'll find that there's a lot of volatility, and you'll find that you'll have options pop up. They're not always going to be great. So for instance, you could take this little sell and you could take this little sell. This one would have been an immediate loss. You could work on these buys because they are above this major moving average. However, these buys are not going to do you any favours. With things like BTC, you're going to have the volatility that the 15-minute becomes usable. I'm still not going to recommend it because in general I'm someone who prefers trading on higher time frames. However, the higher time frames on BTC, especially of late, become quite messy. You'll see that on the hour for the week of the 5th of April, from all the way from the 27th of March till about now, which is the 27th of April, there's only a small amount of clean price action, and that's from the 5th of April to the 11th. Other than that, it has been relatively choppy, and even through previous, you can see that there's not a great deal of clean price action on the hourly. Don't get me wrong, you can probably use it, but it's not clean, which is why sometimes dropping down to the 15 or maybe even the 30 minute might just get you a little bit cleaner. I would say the 5 minutes also going to have some price action due to the nature of BTC. However, really you've got to know the spreads of your broker, and also you're going to get a lot more false signals. With Ethereum, now Ethereum is normally not the same as BTC in this regard of, yes, the 5 minute, looking at it right now, you've got some nice looking sells and buys in there. However, you do get a lot of choppiness as well. And again, the 15 minute for Ethereum is a bit of a choppy mess. So I'm normally, if I'm using this on Ethereum, and I'm going to then look at it on the 1 hour, and if not, I would probably consider the 4 hour. In general, I'm not someone who's going to trade crypto with this method. I find that crypto is, especially of late, and this is recorded on April 2022 for reference, so my opinion might change in future. With the behaviour of crypto at the moment, it's not optimal to trade like this. It's very wicking, it wicks out a lot, and you'll get lots of fake outs. And in general, I'm overly not someone who enjoys trading crypto, especially on leverage anyway, due to the inherent risk. I would much rather take something more stable and trade Forex with it. For me, it's much more of a safety of funds than it is a quick risk reward. Now, we'll very quickly look at NAS 100 and US 30. I actually haven't looked at them with this method, so you'd have to go and test it yourself. Looking at it on the 4 hourly, it actually doesn't appear too bad initially. I do see a couple of signals in here. However, if your stop loss was wide enough, you'd probably be okay, because you do follow up down to here. And if we look left even further, this one here and this one wouldn't have been happy, but it looks on average that you're okay. This is on the 4 hour, and if we drop down to the 1 hour, then you're going to get even more signals, and they look okay. This one looks like it'll have bitten you, and these two here. Excuse me. But other than that, it's okay. Again, we're not interested in taking these buy signals because we're under the moving average. So I would say that you're probably okay. In fact, we're just going to check based off the back D, you might be able to filter some of those out. We'll have a quick look at filtering it down to the 15 minute, but then you're becoming very finite in your moves, and it's not looking so pretty. US 30 is something that's normally more tradable than NAS on lower time frames, but even here you're going to get a lot of false signals. So again, I would probably be looking at my high time frame options. 1 hour again looks a little bit choppy, but then on the 4 hour, even still, that is a relatively choppy move. Don't get me wrong, you could take a move like this. You're not going to be interested in taking anything through here, just simply because of the price action and how consolidative it is. And your moving averages are all over the place with being above and below them. Here you can see that you've made a nice breakthrough, so you could in theory look at taking this buy. And again, over here you might be interested in taking the sells, however they're not going to be very pretty. But again, I'm someone who doesn't overly trade the high volatility things. I just don't see a reason for it. It's more risk intensive, and for most traders it's not something that I would recommend. People always look to indices and crypto as, oh look, you can make a lot very quickly, but in reality, with good risk management, you'll be making just as much off of your forex pairs, and you're less likely to be faked out. And again, we'll check on gold. Gold is something that, yeah, you can trade it with this. Again, you would be looking at the high time frames because that's where gold moves better. With scalping gold, I'll drop down to the 3 minute and you'll see that it's just a mess. Don't bother. Again, the 5 minutes, you can try, it's not pretty because you'll get lots of wicks. This is very much something that you're gonna want to look at your NZD, USD, your GBP AUD, GBP CAD, USD JPY, and you take those nice clean and simple moves because it's going to benefit you in the long run. I am someone who's always preached that for beginners and even into intermediate and advanced, go and trade those lower volatility pairs, because you're going to find them much easier to trade. You're going to find the risk management easier. And if you're someone who's trading with smaller accounts or funded accounts where you've got to manage your risk very, very acutely, then the lower volatility is going to help you immensely. If you're trading these high volatility pairs like your BTCs and your NAS 100s of the world, then you have to be very, very careful about your lot sizes, and also you have to have an innate understanding of how those pairs work. For the average person, it's far easier to learn your normal forex pairs. Now, with this method, there are things to be aware of. You're probably going to get your best moves just as the sessions of which the currencies start. So, for instance, if you're trading on the 15 or the 1 hour, or on a GBP pair, for instance, you're going to find that on something like GBP CHF, you're going to find the morning London session going to be the best. So, between Europe Open and London Open, you're going to find those to be the optimal times. If you're looking at something like GBP CAD, and I'll move to that one now, you'll find that you will probably get a move in either London or in New York session, owing to the fact that those are the two times where they're going to have the markets flooding in for them. And you can see that here you've had this move just as New York has opened, and you had this one here, for instance, just as London had opened, giving my point. Now, with something like GBP ORD, it can be interesting because you will get moves that happen overnight during what would conventionally be called Asian session or Tokyo session. However, in reality, you've got to consider it more of a Oceania session or Australasia session, which does have a very slightly different time. You'll note that they are different from Tokyo session by about an hour, so you'll get things triggering very slightly early. And again, you will then get a move either in that session or in London session. With all the pairs you're trading, it's worth noting down the session times. I would also sit and very, very carefully work out what pairs you want to trade based on what's convenient for you in your current time zone. For instance, if you're someone like me who doesn't like to get up in the morning, then I would be looking towards pairs that would move in New York session or late into Oceania and Tokyo session, because that's when I'm awake. If you're someone who is awake during London session but is asleep during New York or is asleep during Tokyo, then adjust your pairs accordingly. And also look to find what pairs have price action that you agree with most, because there's no point trading something that you struggle to get to grips with. That being said, with this recording, I am about done. And feel free to leave a question in members chat or drop me a DM or raise a ticket if you have any questions on it. And I will see you in the chat.